Hello guys, my name is Martin and today I'm going to present about Tesla company. We're going to go through the analysis of the industry, some ratios that are connected with the company itself, and in the end I'm going to tell you my reason why would I sell or buy a stock of Tesla right now. So we're going to start with analysis of the industry. So as we all know, Tesla operates in electric vehicles industry and clean energy industry. It's a rapidly growing industry and the sector with increasing demand for sustainable, suitable transportation. And basically for last years, you can see it's more and more popular than it was before. Um, then it has success in closely tied up industry growth. Speaking about the sentiment analysis, I would say it's kind of like 50-50. When you think about it, it's basically like that with everything. Haters gonna always hate. So you have some people that are really supporting this type of industry and people that are still preferring something else. Overall, I would say thanks to Elon Musk the mostly. Yeah, he's a big internet persona as well. I would guess that almost everybody knows him in the world. So he's really active on Twitter, social media. He's engaging with his customers and trying to make the best for the company. And put some potential risks that can be meeting with the company itself. It's like competition is not the big one yet, but in the future, definitely the industry, as it's growing now, it will explore even more companies that will do the same thing. Then production scalability improvement areas. There are some, of course, with the delivery profitability. And as an investor, we need to take this into account even before we go for investing itself. So here are some ratios that we're going to talk about. First is profitability ratios. We got two: net profit margin and return of equity. So net profit margin, we can define it as net income, like the portion of total sales revenue. So basically the amount that remains after all expenses, including taxes and interest. The higher the net profit margin, the greater profitability. In the graph over here, we can see that the margin is at 11.25%, which means it's pretty good right now. Same goes for the ROI, return of equity, where we can see that this is basically describing how effectively company generates profits of shareholders' equity. And the end of September, it was 14.17%. Yeah, highest was 33, and the lowest was minus 89. Next, we have liquidity ratios. We got actually two of those, again, current ratio and quick ratio. So if we look at it, the first one, current ratio, indicates company's ability to cover short-term liabilities with short-term assets. And here in the graph, we can see it was going consistently upward. It has upward trend, both assets and liabilities. But in the end, here we can see the ratio is around 1.69, which is good because basically when the ratio is above 1, it suggests that the company is doing good. It is in a good position. Quick ratio is similar to the current ratio as well, and it provides kind of like clearer picture of company's ability to pay off short-term debts. And again, here has like similar trend to the current ratio. Yeah, both quick assets and quick liabilities are going upwards, and the ratio stays above 1%, which is considered as a good sign. Then we have solvency ratios. Yeah, first one is debt to equity. It shows the proportion of companies' fundings that comes from debt relative to equity. The lower the ratio, the better. And in this graph, we can see kind of like opposite way trends, which in first one, yeah, goes downwards. and the equity goes upwards. But if we combine it and we look at it from like 2014, 16, 18, yeah, it has been basically stuck around ratio of 0.5, which is good for us. Yeah, once again, interest cover ratio. Yeah, Tesla interest cover ratio during last 3 years was average 18.3. And these two ratios are really, sorry. First of all, interest ratio measures the company ability to meet interest payments. Yeah, the higher the amount, the better. For us, it's 18.3. And these are really crucial for the assets company long-term financial health and ability to manage debt effectively. Yeah, investors, as investor, you want to make sure that company will be able to meet the capacity of financial obligations, and you want to avoid risking the fact of bankruptcy. Yeah. Then we have efficient ratios. Yeah, inventory turnover. It shows how quickly a company can sell its inventory, reflecting to management, lower holding costs, and potential cost flow. Here we can see turnover ratio about 6 is considered as a good one, and we have 6.4. So once again, Tesla is doing good. And receivables turnover, this shows how fast company collects outstanding receivables, impacting cash flow and liquidity. Yeah, again, above 7.8 is good. And here we can see that Tesla has 40.7, which is crazy. Yeah. So this is a really, really good sign that we need to take into account. Growth ratio, I would say the most important one for as an investor. If we talk about EPS, which is earnings per share, yeah, because that's what we are buying, the shares of the company. Basically here we can see the statistics, quickly explaining what is EPS. So basically important for investors, really, because it indicates how much profit it generates for a single share that it's sold. So let's say we buy one share. Yeah, for one share, the Tesla gets $3.11. The higher number, the better, because higher numbers are basically usually more attractive for the investors. And also it gives us some extra profit through dividends, or basically the future market going up, yeah, the values. And for a final step, as a recommendation, I will use a trading view. So here we can see in the long-term graph, yeah, that the Tesla company had a fall around here. This is called RSI. Yeah, if it's below 30, it's a good level to buy a stock, because then it's most likely going to go up. So here we see now is an upward trend line. If we go to closer look, yeah, and it's most likely going to go up as well, because before it had value about 300 euros, or this is actually dollars, $300. Yeah, and now it's currently stuck at 19. So this was the lowest level at 98. Yep. But right now, combining with RSI and the fact that Tesla was doing really good in all the ratios that we presented earlier, we can consider this and guess that the trend now would most likely go up and make some profits. So yeah, that was it. Thank you for watching, and see you next time.